Well, ladies and gentlemen, welcome to my presentation of Sdm Se. My name is Oliver Reisinger. I'm born and raised an investment banker, left the industry in 2015 and started my own business, basically finding, the jewels of the German Mittelstand. I acquired Sdm in that form as a GmbH in 2019, and we developed the company so that we have been able in 2021 to IPO the company and to start our buy and build strategy. And in 2023, we started to roll out our buy and build strategy. Having said so, as you can see in the title, this is a $1 billion market. We want to be part of it. The market is very, very diverse. There are a lot of companies. There are more than 6,000 smaller companies within Germany alone, most of them in the range between 20 to 40 people. And we want to be a part of the force to more or less implement those in bigger units. I jump to page 3 and give you a little bit of insight. What is the rationale behind it? The threat to people and values is increasing, as I think we can all experience ourselves, and the respect for is decreasing. This demands a multi-billion-dollar market, the security industry, and I will go into further details a little bit further. As I said before, we want to take advantage of this opportunity and have launched our buy and build strategy in 2023. Security is a high growth market. The demand for security is increasingly growing. Public authorities, companies, private individuals, everybody is asking for security support. There is obviously a change in our culture or a change in society as such, because we see an increasing willingness for violence, an increasing willingness to express oneself with a form of violence. The industry sales has almost doubled since 2010, and the high demand is also there in the current economic environment. It is very funny. What I always say is, if economy is prospering, we have our books are full, and if economies are not prospering, our books are full as well, because the demand for security is a factor that will not is not depending on the stock market or on economy. We see a great potential for buy and build in this growth market. Currently, there is obviously, as you have probably heard a couple of times in your life before this presentation, the market leader Securitas. Securitas is also stock listed. Below that, in Germany, we have no other company that is stock listed. Securitas is also not stock listed in Germany. It's a Swedish company. At the moment, and we will come to my numbers later, we are in the region of the top 20 at the moment. Having said so, I might add to that some of those companies also add their facility services to their total turnover. Within our company, we don't have facility services as such. We purely count security services. As I said before, the industry is highly fragmented. But having said so, or because of that, the top 10 only have around about 30% market share. As I mentioned before, services such as cleaning and facility services are often offered and also accounted into their turnover. If I look at those numbers, we are with the turnover that we will achieve latest beginning of next year for the 2024, we will be in the top 20. There is an enormous potential for taking over companies with turnovers between 5 to 50. Also, I will cover this a little bit later, because we are not, we have acquired 2 companies this year, but this is not the end of our buy and build strategy. We want to at least be able and build a corporate framework and to be able to at least acquire 1 to 2 companies every year. What is Sdm Group? Well, our core business is very well plannable. What does it mean? If you have in mind the classical security person is a person, you know, a big bully standing in front of a nightclub, or you see security personnel when there are, you know, musical events, big open airs and something like this. This is all fine. This is all good. We don't do that. We have specifically defined our core competence in property and site protection. Why is this good for us? It is very, very good because it's plannable. We can plan at least 4 to 6 weeks ahead. We have clear statements for our people when they have to be at their job. We have 24 hours, 7 days, plannable income from our people. We have out of this the demand from the people to work more, to do over hours, and this is additional flexibility that we can use. We offer obviously quality services. Why obviously? Because in this industry, in the past couple of years, we had press releases where some companies don't have the quality standards that are now legally required for this industry. You need to have a so-called IHK 34A test. This is minimum that you have. You need to be in the BAFA as a registered security person. All our people have first aid tests. All our people are very high educated at the highest level that we have. In the group, we have currently around about 550. Those numbers can vary dramatically. We do not have a lot of people that are on 520 euro jobs. Most of our people, over 95%, are fully employed. Those people don't sit around. It's not like we have them in the office and send them somewhere. They are always at the site. They are always in doing their hours. They're always working. As I said before, we started our build and buy and build strategy in 2023. In January, we have acquired a rather small company in the east of Bavaria. Very interesting little firm with 25 people. Why was this so interesting for us? They have a canine unit, which is probably among of the best in Germany. They are very well, very well situated in east of Bavaria, where there are 8 or 9 golf courses. So they have, you know, a huge playground to grow in the next couple of years. And I have to say, in this year, the turnover of this company had a growth of over 40% already. We will go ahead with this. Now we are actively super regional in Bavaria and North Rhine-Westphalia. When you follow the story of SDM, you know that we mentioned in the beginning that we would like to stay in the metropolitan area of Munich, which will offer us enough growth for the next couple of years. Well, this does offer us enough growth, but 2 things are important. First of all, Bavaria and especially Munich in particularly are very, very difficult because the KVR, the legal authorities, they check, test, and they control much, much more than in any other cities in other areas of Germany. We know this because we have talked to a lot of other peoples. Secondly, we have been looking for companies to acquire, and I spoke to over 18 companies, and the 2 that we found have been the ones where I said, wow, they are, you know, their mindset is exactly like SDM. They are very, very good fit. We only acquire companies where we are sure that there is a first and second a line of management that bears the same spirit that we have in SDM. Also, if you look at EVSM that we acquired close to Köln or Cologne, they have the same spirit. We have approximately 50 million euros of revenue. I'm not a great fan of saying it's 50, because if you reach 49 because you don't want to do a job because the margin is not good, then a lot of people say, well, you have not reached your target of 50. That doesn't bother us. That's not interesting. Whether we have 49 or 48 or 52, that's not interesting for us. Interesting for us is that we are on sites and that we have jobs and objects where we achieve our target margin and where we are confident that we can do a good job, a quality job. We will have synergy potential out of those 2 mergers. We have actually in 2023 seen the first synergies already. I think we are just exploring the synergies deeper and deeper, and I think there will be some surprises in 2024. I'm not sure how much time we have later for questions. What are synergies? You know, it's very important to mention this. When I was at the GBC presentation, Herbstkonferenz, a lot of people asked that. Well, it's not only that, you know, we don't send people from A to B. This is not a synergy. But for example, when you are focused like SDM in Munich on working for the government, working for the city of Munich, and if you look at Cologne with EVSM, they are mainly on the mainly guarding sites for industrial companies, for you know, commercial companies. So why is SDM in Munich not doing this, and why is EVSM not going into the public area? There are a lot of learnings at the moment that we have, and people sit together, discuss it. Very, very fruitful, and actually also very interesting. Well, as I mentioned before, further takeovers are in the pipeline. We have a pipeline now of 7 people where we have exchanged NDAs, where we have looked into the numbers. We will not be able to take over all 7 of them. Firstly, this will stretch the organization far too much. Secondly, I'm not a great fan. You know, we have to digest, and then we can start to have the second plate. Now, the second plate in 2024 will be probably 1 or 2 companies. Out of those 7, I have a gut feeling that, you know, I have 4 that I like, and I have 2 that I would love to have. It's a question of price. We don't buy too expensive. And moreover than that, it's a question of fit. It needs to be a natural fit to the existing units that we have, mostly a mind work fit. I jump to page 7, if you allow me to. We have a broad portfolio of security services. Obviously, a company of our size offers every kind of security service. But as I said before, we are, you know, very much focused on plant and property protection. Site protection is for us very plannable. It is very, very interesting because we know that we can do it. We have huge experience, and we know that our people are standing there and doing a good job. Obviously, you know, out of I would say cross-selling, we also do cash transit and courier services. We have the occasional fair trade. If people want to work over hours, we work together with another company who is in the region of Munich, very, very active in fair trades and events. We have personal security. We do have people who carry weapons, although this is very, very rare. We do on a very, very small scale, only if the client demands it, personal services like chauffeur services and reception. Again, out of this, we do see some cross-selling potential because we said now we want to focus 100% on plant and property protection and site management. It does not mean that if the market changes, we will not have a focus, and we will not look at other things that could be interesting. For example, the patrol duty business is growing due to, as I mentioned before, the feeling that people are not as secure anymore. There is a high demand of patrol duties, especially in the south of Munich, where all the FC Bayern players live. I jump over to page 8. I'd like to show you the group now. On the very left side, we have obviously the nucleus, Sdm Sicherheitsdienst in München. It is based in Munich. It had, when we took it over, around about 10 million of revenue. Last year, we finished shy of 18. We do not work with subcontractors. This very, very rarely. We have a focus on property protection. In the middle is our new baby. Having said so, baby is interesting because EVSM is obviously bigger than SDM, the mother or the nucleus of the whole thing. Takeover was done executed in 2023, close to Cologne, as I said. 9 months, we have around about 24.5 million of turnover. They do have established partnerships with subcontractors. Now coming back to learnings, coming back to synergies. We in Munich, or SDM in Munich, is not very well used to work with subcontractors. Again, synergies that we can learn. On the other hand, we have looked at the subcontractors and are very, very actively looking at the subcontractors. And in my mind, it is, if a subcontractor still makes money, I'd rather hire his staff and make the money myself. And as I mentioned before, on the very right side, Rottaler Sicherheitsdienste, rather small. It is 18 plus 6, also focused on property protection events. The dog squadron or K9 unit, weapon carriers, so a fully, although very small, a fully operational security service. This is all under the, the mother Sdm Se. And if we would grow and further acquire companies, our strategy is clearly that we're looking for hubs. So if we would acquire a company, for example, in the Frankfurt area, Rhine-Main area, we're looking for a company with a strong name recognition, with a strong branding. I'm not a great fan. As I said, I was in investment banking. I had 3 major takeovers, and every time the name was destroyed, people were upset, and actually money was destroyed as well. So we keep those strong names. We don't want to put a burden on our clients to say you need a new name, new bank accounts to pay your dues. Doesn't matter for us. Now obviously getting more and more interesting. I have to say, before we go into numbers, I have to move my own pictures, otherwise I can't see anything. The group figures are not consolidated as defined by the German Commercial Code HGB, HGB, under we conduct our business. They are based on a simplified economic approach. I have to say this because we have taken the companies economically, overtaken the companies economically in the 1st of January 2023, but HGB says only when you have the when the amount is paid and you have the full commercial control, then you can count those into your numbers. Good. Let's go to the left side. Operating cash flow almost doubled. The revenues of IWSM, EVSM in Cologne has one special effect at the beginning of the year, which was accountable for 2 to 3 million additional turnover. Buy and build is interesting because, as I mentioned before, we are under the regime of HGB, German Commercial Code. German Commercial Code says every takeover, every company we have to take over, we have to write off the amount or the price of the company over a period linearly for 10 years. That means every time we take over a company, we have to write off 1/10 of the price of the company. This will obviously make the numbers not look so good. Having said so, being long enough in the banking industry, one should remind that this is not a car. You don't write off a car. A car is done after 10 years. You can put it on the junkyard. A company is not done after 10 years. And obviously, those deductions are deduct also our tax burden. So very, very interesting. So as long as the longer we grow into this, the more interesting it will be. Looking at the numbers on the right side now, as I said, this is a brief comparison, which is simplified. We have, biggest expense, obviously, in this industry is the personal expense. As I always say, we have walking money, we have walking capital. What does it mean? We don't have, real estate. We don't have cars. We lease everything. We rent everything. But obviously, we need people to do the job. So this is our highest, part of the balance sheet, the personal expenses. We think and we believe that we have a very good grip on it. Obviously, questions will be, what happens if Mindestlohn rises? What happens if this and that? Well, nearly all our contracts we have with our clients are either inflation-based or are linked to Mindestlohn adjustments. We have an adjusted EBITDA of 2.96 million after 9 months in 2023. It obviously looks tremendously good compared to figures before. Having said so, figures before was SDM alone. The adjusted EBIT is around about 1.9 million. We obviously have, used bank capital and to, purchased the company, not everything. So interest income is rising. Adjusted EBIT is still 1.586. Another question that will come later. I know it. I hate it all. As obviously the tax burden. We realize that currently we have to pay the taxes on the company's level, not on Sdm Se level. This we will have to change. So we expect that there will also be synergies in lowering the tax burden. We have a minority stake in there. Also, good question. Why is that? We acquired 75% of EVSM. Why? 25% stay within the manager in charge, who was there for the last 4 years in charge, and we want him to be a part of the family and a part of the transaction. So we come to a net income of around about 242,000. Obviously, it was a little bit burdened because with every merger you have costs. I can't tell you how solicitors and barristers are expensive these days. Let's jump to page 10, please. Hope I'm good in time, that we have a lot of time for questions. What is the outlook? Well, obviously the industry has an organic growth of 10 to 15%. What does it mean? It is throughout Germany. It is very, very hard to achieve a organic growth in the Munich metropolitan area at that pace. Having mentioned before, there are definitely more restrictions within Bavaria. As you all know, Bavaria is always very strict with their rules. So I reckon the organic growth path within SDM will be in the region of 5 to 7, maybe 10% per year. The organic growth at EVSM, I think, will also be, spurred and fired by synergies above that. Next part is realizing synergies. I mentioned a couple of synergies already. We are very, very keen to find some more. It is very good to bring the people and the managers of the companies together and let them talk. Let them talk about their business. And as soon as you sit there and listen, what can we do? What happens there? There are so many synergies that on a natural level evolve. On the other hand, obviously, we plan on Sdm Se level to build a corporate structure where we can help the companies below Sdm Se to be more, to work less on the little nitty-gritty details. So the synergies will not only be in the operational units as such, it will also be a big job for Sdm Se to help the operating companies to save some money, to make things better, faster, cheaper. As I said before, benefiting from each other in acquisitions, dog group subcontractors, we can learn so much from another. There's a whole program that those managers have set up for themselves where they go, identify bit by bit, what can they do. Further takeovers, I mentioned before, this is a fast growing and acquisitive company. We will at least have one takeover in 2024. Range between 5 to 40 million euros. Our goal is to reach 100 million turnover within the next 1-2 years. 2. And I think we can achieve that. We will have a long-term goal of being under the top 5, under the top 10 at least. I think top 10 we can achieve. Top 5 will be a challenge in the next couple of years, but our long-term goal is 250 million that we want to have. How do we finance this growth? Well, on the one hand, obviously we are every banker's baby. They love the business model. They say we don't need to buy heavy machinery. We don't need a lot of working capital. All we need is a good organization. So bank financing, bank debt is available for us. It is easy and to achieve. And I have to say, the last financing, although we are in an environment of rising rates, wasn't at the peak of what we have expected. Obviously, our cash flow is growing, and our cash flow will be stronger and stronger every year. And I reckon, within the next 2 to 3 years, we will not need bank financing anymore. We will do this all out of our cash flow. So you have a highly acquisitive company that generates enough cash flow to buy themselves into their marketplace and to buy themselves a share of their market without using bank capital. If you take a look at the right side, this is where we come from. Obviously, the big jump in 2023 is the merger with EVSM. But already since 2019, you can see that we come from 9 million, close to 17 million, now 50. And our goal definitely is medium term 100 million. Medium term, I'm a very, I always say medium term for me is 1 to 2 years. Good. Last but not least, I reckon one of the most important points for investors on this page, we currently have no planned capital increase. We did a 10% capital increase to help to finance EVSM, but currently we have no capital increase planned. I think this is fair to the investors to communicate that. If there would be a target where we, economically need to stretch so much that without the help of a capital increase, we could not be able to execute and take it over, we would definitely communicate this. And this would not be, behind closed doors. We would definitely take our investors onto board as well. Yeah, I jump to the next page, which more or less shows you our capital markets display. We have a share capital of 3.8 million. Share price currently is 390. This was a roller coaster. High was, I think, 480. We issued at 350, so we are still well above our IPO pricing. At the moment, I have reduced my stake to under 50%. So we have, if you take into account 50% free float for a company like this, is very, very nice. Now, the next part obviously is, my two favorite people in the world. Thanks to Goldman and Hassler. Our researchers see ourselves and the share price, the fair share price, at 690, respectively of 840. We are listed at every stock exchange, including Xetra. And you can take a look at the prices. There's quite some volatility in there. This is more or less, I think, this was the last page, and I'm happy to answer all questions that come up and start the conversation with you guys.
Thank you very much. Really exciting presentation. Your growth looks great. We have just 1 minute left, so just one question. So for the coming years, you have a big growth ahead of you. What are the challenges for you, or how could you potentially exceed the growth that you expect?
I think, funnily enough, it is not a challenge to find the right partners or the right companies to take over. The challenge that we face now is clearly to set up an organization that is able to digest the next turnovers for the next years. So we will definitely work on our corporate governance. We will definitely need to build a structure. Currently, Sdm Se is like all the other companies, very, very lean. Over 50 million euros, you cannot afford to be lean anymore because you need to buy so many external services that it makes no sense. So we build a strong corporate governance, a strong corporate structure on Sdm Se within the next couple of, basically we start next week, month. We will have support there from a lot of people that we have spoken to already, and this is, for me personally, the biggest challenge, to build a strong corporate structure.
Excellent. So the time is up. Thank you very much.
You're welcome. Thank you very much for your time and for listening.